Top of the morning, traders. Hope you're having a wonderful week so far and hope you enjoyed my video that I shared yesterday talking about markets like Bitcoin and the rest, why they're going down. And today I want to focus on the stock markets and why I think I've been saying this a lot in my videos, where I think the stock market is stretched too thin, and I want to give a good example by what Warren Buffett is doing, and I want us to look at that a little bit. But before that, this video is proudly brought to you by Paperstone, your trusted broker. If you don't have an account with them, use the link below. And lastly, Ken and I are having one last class to teach financial markets and how to trade in the forex, crypto, indices, stocks, and all that. So if you haven't registered, the number is below. So I won't say much, and let's get straight into the video. Now, if you look at the S&P 500, which will be my focus for today, because we're talking about the wider market as a whole, the broad markets. You can see the markets it's at all-time highs. We've had 2-day corrections this week, but when the market started earlier on this week, markets created new all-time highs. If you look at that growth, this is a weekly chart. Okay, since 2022 bottom, markets have gone up significantly, about 100%. Okay, so markets have more or less nearly doubled. Now, is that a good thing? Is it a bad thing? It's a good thing during the moment it was rising, but at the moment, is it a good thing? Is it a good thing to enter into the markets? If you look at the Bitcoin markets, and I talked about this yesterday, there's a certain pattern that's forming there that I believe could start catapulting markets to the downside. And in that video I explained yesterday, we've seen markets yesterday significantly move much lower. Okay, but go watch that video. I shared it recently. Okay, now back to the stock markets. The Buffett Indicator. Most of you may not be familiar with this. Okay, but before we go to the Buffett Indicator, who is Warren Buffett and what is his company about? Now, this is Warren Buffett's company. It's called Berkshire. Okay, Berkshire Hathaway Incorporation is an American holding company whose conglomerate includes over 80 companies with activities spanning a wide range of business areas, including insurance and reinsurance, rail freight, energy supply, financial services, manufacturing, wholesale, and retail. The chairman is the major US investor and multi-billionaire Warren Buffett. His company is currently worth $1 trillion. He is, in my own terms, one of the most not one of the he is the most successful investor in our time. Okay, he is the most successful investor in our time. As of November 2025, Berkshire Hathaway has a market cap of 1 trillion. So Warren Buffett basically invests in multiple companies here and there, and we'll get into more details of how he invests and which companies he's in a later video. Today I want us to focus on the Buffett Indicator, and that is why Warren Buffett is sitting on a pile cash of a record high of $382 billion, as Buffett likely awaits better deals in the markets, meaning the deals are not so good at the moment. Okay, Warren Buffett's Hathaway profit rose in the third quarter while cash pile ballooned. So his profits ballooned, his cash pile ballooned. The company did not announce any buybacks, share buybacks. So they're not, because sometimes when Warren Buffett is sitting on a lot of cash pile, he tends to buy back his own shares. This time he did not. Okay, now this is a good article. I'll leave this link below so that you can go and read it. Okay, and it's funny because this was posted on November 3rd, and they sort of did something similar to what I was saying. Cash stockpiles are important to Berkshire shareholders because they are often thought as dry powder, money that can be invested in the business that meet Berkshire's value forecast acquisition and investment strategy. In a recent article that I did, okay, I did this on 31st October, a few days before the others did it. And I sort of talked about this. Forget holding cash. It's time to build dry powder in stable coins and prepare for the opportunity of the decade. Okay, so at the moment, I'll share this link below. I won't go through this, but it's important for you to start building a stockpile. And I talked about why it is not the best time to start investing in cryptocurrencies at the moment. Okay, because I believe the markets are stretched too thin, and that is just my perspective. This is not financial advice, and I said it in the article below. This is not financial advice, but I've given my reasons why I think this could happen. And since we're still playing it small, we're not in the levels of Warren Buffett of using big cash piles. the best thing we can do is sit on stable coins and wait for the right moment to start buying back into Bitcoin, Ethereum, Solana, and the rest. Okay, so this link is also below, so I'll leave it below. You can go ahead and read it. And I started writing these articles, not sure if I'll share them yet. Okay, these are just articles I write for myself. If you go to my LinkedIn page, which I'll talk about later, I put articles on there, so you can go and read my articles. I'll share the link to my LinkedIn below, where you can go ahead and read these articles. Sawa. That is my LinkedIn profile that I've shared below in the description below. Okay, so back to Warren Buffett's stockpile. Now, the Buffett indicator. Okay, let's come here. What is the Buffett indicator? The Buffett indicator, aka Buffett index, or the Buffett ratio, is the ratio of the United States stock markets to the GDP. Okay, so it's a ratio. Buffett indicator is the total US stock market divided by the gross domestic product. Okay, as of June 30th, 2025, the ratios are, so at that time, as of June 30th, the market capitalization was around 65 trillion of the United States, not the whole world, and their GDP was 30 trillion, which is giving a rough estimate of about 200%. Okay, the ratio fluctuates over time since the value of the stock markets can be volatile, and this is not the case at the moment. If you come here, this is companiesmarketcap.com. If you just come here at market cap and look at the American countries, so if you come here and if you come to the page itself, you'll have just global ranking, which you have over 10,600 companies, a total market cap of about 132 trillion. That is worldwide. If you come and take America alone, America takes almost 45% of this total market cap. Here, if you come to the United States, it has a total market cap of 60, almost 70 trillion as of today. Okay, this one here is saying as of 30th June. Today is November 5th, 2025, with a market valuation of about 70 trillion. Okay, so the ratio fluctuates over time since the value of the stock market can be volatile, but GDP tends to grow at a much more predictable rate. Okay, the current ratio is 217, and if you look at an updated version, it's about 220. Okay, and this page actually says we are significantly overvalued, and that answers even why more so Warren Buffett is sitting at a record high stockpile, a cash pile. Okay, the current ratio is over 200%, is approximately 68%, or about 2.2 standard deviations above historical trend, suggesting that the stock market is strongly overvalued. Why does this matter? The Buffett indicator expresses the value of the US stock markets in terms of the size of the US economy. If the stock market value is growing much, much faster than the actual economy, then, my friends, we might be in a bubble. Okay, so I won't go through all this. I'll also share the link below, which you can do for yourself. Okay, and this is another link as well, where as of today the market valuation 67, we've seen now it's actually 69, so this is about 230% of the last reported GDP. Okay, and that is why, okay, there's much more to read here and there's much more to check. And if you look historically, Buffett's indicator also showed very important significant times when market was highly overvalued during or in a bubble. Like this was in the 2000s, where market was at about 130% during the dot-com crisis. Okay, and markets actually went lower. Coming into the 2007, market was at 100%. Okay, and after that, markets went down. Most recently, during 2022, when we had that market crash, okay, we had a slight market crash. Market was at 185. Markets crashed and markets recovered quite fast, as well as also in COVID. And right now, we are at all-time highs at 220% plus. Okay, and if you notice something, markets, when they reach 100, we had that market crash. When markets reached 150 thereabout, we had a market crash here. During COVID, 160, we had a market crash. When markets reached nearly 200, thereabout, we had a market crash. Now we are significantly above 200. So I'm not calling a top at the moment, saying right now we're going to have a top and the crash is going to happen right now. But using the data that I shared yesterday in the Bitcoin analysis, where I was looking at markets stretched too thin, now looking at the stock markets where markets are stretched too thin, there might be a revaluation coming into the markets where the markets might have a big crash coming into the markets. Okay? And that's what I wanted to share today. Other than that, you can always follow my LinkedIn profile because that's where I share more articles which you can read, comment, and also share with other people who are interested in the financial markets. So, other than that, my work is always to help you remain woke and remain financially literate. So, my people, have a good day, and I'll see you in the next video.